Ladies and gentlemen, welcome back to the channel. We gotta talk Tesla stock in today's update. Tesla was up over 5% today, hitting the highest level you have seen since the post-election rally we had for Tesla, where Tesla essentially skyrocketed on hopes that Elon being close with Trump would mean good things for Tesla. I was actually on a cruise, talking about this rally, the post-election rally for Tesla. Made a lot of money on it as well. That was a pretty good options trade, I will say. Now, today, you've surpassed the high that you hit on May 29th. Things are shifting for Tesla in a dramatic way. Today marks the start of a new chapter for Tesla. Now, I think the chapter started a while ago, but I think Wall Street's a little slow to catching on to things sometimes. And I think Wall Street is really starting to catch on. From a technical perspective, this is a breakout. Okay. Now, I want to see another day or two if we can get above that 367 level. But if we can, this also marks the top that you had on February 19th when we tried to recover a bit, got rejected at 367. 367, I will also mention, is when Tesla really took off following or to start that post-election rally, the rally that went to 488 or so. There's a lot of positioning around this 367, 370 level from a logical perspective. If you can get above that and start to get people that take on new positions at those levels, you could start to see a pretty dramatic rally. And I think this is right on time for my projection of Tesla stock going to $500 by the end of this year. You want to see the stock break out above this 367 level. Specifically, you want to close higher than 367.71. So you want to get above that. That was the intraday high, I should say, on May 29th. And today you did actually hit a high of $368.35. So you did get above that at least momentarily. This really changes the range for Tesla. Tesla's been in this range bound motion for a while. From a technical perspective, you have a very good looking chart, right? Tesla is trending to the upside. It's been in this channel really ever since early July. So for months now, you've been kind of going up, going down, but trending higher. And now we're at that breakout moment where we could get a leg higher. Okay. Now, the news today that sent Tesla higher was kind of twofold. Okay. One part, it was Tesla getting approval to start testing autonomous vehicle robotaxi solutions. And of course, Nevada. Okay, that was big news. And I think it's going to be news that keeps on giving. Okay, think about it like this. Tesla stock is lower today than where it was, back in, again, May, right? Similar prices. Tesla's lower today than where it was in February or the post-election rally, even though the robotaxi is now in existence. I don't think that makes a whole lot of sense. Tesla has opened up a whole new massive market opportunity for themselves and continue to execute in driving that longer-term growth in robotaxi. And the stock has zero reflection of that. You would have no idea that Tesla launched the robotaxi. That to me sounds idiotic. Now, that was some of the big news today. It was also reported yesterday that China's Model Y orders are out till November. So people got to wait a long time. There's a lot of demand. That is also, again, very much a positive for Tesla that I think is being reflective today. Now, in the broader markets today, you had CPI that came in around expectations. Super core CPI came in much better than expectations. So that was good on the inflation front. But you had initial jobless claims that came in the highest you've seen in years. at about 260, 65,000, something like that. The expectation was 235,000. So that is like seen as just enough weakness to confirm many cuts, but not enough weakness to spark recession concerns. So it's kind of like a Goldilocks area where you got enough to get rate cuts, not enough for recession fears. You start to get these rate cuts, economy starts to look better, right? And get better. There was also a lot of positive trade today on South Korea, on India, potentially, getting deals done, Japan. There was a bunch of trade comments as well today. So that's what really was the catalyst for Tesla. It was, again, twofold. It was what happened with Tesla. And I think, again, all of the good news, Tesla launching Robotaxi in Austin, the Model Y L coming, all the good news we've had in the last couple of months has been kind of overlooked via Elon's politicals or September seasonals or XYZ. Now you're starting to break free from that. And you could see via the stock moving substantially higher today. And now you're literally in what could be a new breakout for Tesla. Again, we want to see what happens tomorrow. We want to see what happens, over the next couple of weeks. But if Tesla's doing this well in September, things could get pretty crazy October, November, December to the upside for Tesla. And that's the way that I'm looking at this, right? Tesla should probably not be rallying the way that it is, okay? Considering September is so bad. Now, in option activity today for Tesla, you had 330 different trades totaling $201 million with a positive order value of 63%. Short sellers covered about 253,000 shares today, 2.88% short interest of free float, $27.2 billion sold short in Tesla, totaling 78.15 million shares that are currently sold short. Now, I also think into the end of this year, you're probably going to get a pretty euphoric market generally, but I think there's going to be a lot of optimism around Tesla, okay? For all the reasons we've mentioned here in this video, but Tesla's really the only real world applier of AI. NVIDIA, all these other companies that have done well are really the enablers. Tesla is the applier of this real world AI technology. And I think that's going to be a big investment theme in 2026 is not just, how much money can you save from AI, but how much do you expect to grow revenues from AI? Tesla is unrivaled in that sense. We also have Elon Musk's compensation package, which has little to do with the auto business in general. There's only one tier out of 7 or 8 that have anything to do with the car business. It was very much an AI performance compensation package, which again, for Tesla stock, where a lot of investors don't even think about the AI prospects in Tesla, you have to kind of start thinking about the AI prospects in Tesla. Now, before we go ahead and get further on into this video, I just want to say, if you guys want to come join the best trading community in the entire world, check out that link down below in the description of this video. What we do is we go out and find high quality, high conviction companies to invest in that are small caps and pure play AI stocks. Okay. When we find those dislocations in markets, where small cap AI stock is trading at a fraction of one of its peers that is perhaps just more well known, that is perhaps an even better company. Okay. That is a dislocation. That is an opportunity most of the time. We're going out and finding these opportunities and investing in them early. Okay. Portfolio performance this year is up 167% year to date. And I think, as I've said before, it's going to be up well over 200% by the end of this year. Hell, maybe 300 by the end of this year. There's one stock in particular that has started to do very well, but I think is still really early stages. So if you guys want to come get involved in the best trading community in the entire world, check out that link down below in the description of this video. Again, I'm not a financial advisor. I'm not a financial planner. I don't know what's going to happen tomorrow. Things could change. You need to come to your own conclusions and do what's best for yourself. Do not, join that expecting to just copy everything that I do and to make money. Of course, if you do that, I'll make money. Maybe you'll make money. You might lose money. You might lose all your money. I might lose all my money. I'm not a financial advisor, not a financial planner. Some of the shit we do is reckless. So contact one before making an investment decision, but that link is down below in the description of this video. Okay, now with that said, tomorrow we do have the Michigan Consumer Sentiment Survey. This is not going to be as big of a catalyst clearly compared to what we had today, but it could add a little bit of bullish fuel to the fire if things come in good. Michigan Consumer Sentiment headline number is expected at 58. Last month it was 58.2. So you're expecting a little bit of a fall. 5-year inflation expectations are expected at 3.5%, unchanged from last month. Consumer expectations are expected to fall from 55.9 to 54.9. Current conditions are expected to fall from 61.7 to 61.3. And 1-year inflation expectations are expected to fall from 4.8% to 4.6%. So you really want to see economy doing good to okay and inflation expectations coming down. If you get that, then tomorrow is going to be a good day. Now, if you did not see in the last video as well, this makes me bullish as hell because when you have more bears in markets, you have more upside for markets. Bull markets end when everyone is bullish. Bubbles pop when everyone is bullish. Okay? We're nowhere even close to that. And this is only one metric to look at, of course, but it just highlights how bearish a lot of people are. Now, bearish sentiment in the AI Investor Sentiment Survey today came in at 49.5%, up from 43.4%. Neutral investors fell from 23.9% to 22.5%, and bullish investors fell from 32.7% to 28%. So check this out. The historical average for bulls is 37.5%. So we're at 28% today. You're what? 8.5% lower than the historical average. Fine. Neutral investors historical average 31.5%. You're at 22.5%. So quite a bit lower there as well. Bearish investors historical average 31%. Today you're at 49.5%. You are 19.5% higher than historical averages for bears. People are very bearish right now, and that, my friends, is going to fuel the upside for markets into the end of this year and what I believe to be a massive rally in 2026. I believe the next 3 months are going to be really, really good. Some of the best 3 months we've ever seen. But I think 2026 is going to be shockingly good, as provisions in the big beautiful bill are going to mean more investments and capital expenditures and better, economy for consumers. You got to remember the no tax on tips, no tax on overtime is realized on tax returns. So for a lot of those lower income consumers, they're going to get a much larger tax return back. If my math is correct, if you make $25,000 in tax tips that are taxed normally, you're going to save about $5,000, let alone any overtime. That's going to save people a lot as well. So yeah, that's big. Okay. And that's going to start coming around in like April. And you're going to see potentially more consumer spending behaviors, going up and people generally doing a little bit better. I also think real estate's going to start moving around a lot more. People are going to be able to sell and buy, and people are going to take a lot of money to their bank accounts from that alone. I actually think real estate volume starting to pick up is one of the sleeper catalysts for the economy for next year. It's something that nobody on Wall Street I've heard actually talk about that could be something that is very much worth talking about. We all talk about the big beautiful bill. We talk about all these other things, but what about real estate that hasn't moved at all? People are not buying. They're not selling like they were in any year prior. Like during 08, 09, there was more people buying and selling homes than today. Yeah. It's going to be a catalyst for next year. It's going to be a tailwind. Now, obviously, I think earnings are going to come in great. I think AI is going to start to really prove itself in a more than just CapEx way. I think there's going to be more use cases. And I really think in 2026, it is the year of AI, right? So there's other things as well. Trade deals should be, getting done, or there should be some kind of clarity around trade. other catalysts like geopolitical tensions coming to an end. There is a whole list of reasons why I think 2026 is going to be a great year. And I think Tesla, very much so, is going to be the epicenter of that. Okay. People are going to stop looking at Tesla like a car company. They're going to look at Tesla and say, okay, it has a car business. That's great. Kind of like Apple, right? Nobody really, like, serious investors in Apple, like, they don't look at the company as a phone company, right? They look at the company as a services company, as you know, phones are just a way for the company to upsell consumers on other things. Nobody really buys Apple if they're super bullish on phones, or at least they shouldn't, right? It's about services. Services is what people really care about for Apple, right? For an example. And future AI projects is likely why people buy Apple as well, but not just because they're a phone company. And I think much the same is going to start happening with Tesla. Like, yes, they are a car company, but what about the energy business? What about Robotaxi? What about Tesla's AI businesses? Okay, what about Optimus? Those are going to be talked about a lot more next year and go into a lot more favor next year. So let me know your thoughts on this down below in the comment section. I would love to hear them, but honestly, again, I'm impressed with what we've seen so far in September. That's not to say the second half of September might not be bad. Like, that's certainly a possibility, but so far, so good. And if September can't beat us down, I doubt October, November, or December will, especially once we start to get some rate cuts. Rate cuts, as I've said before, in and of themselves are not bullish nor bearish. It's the reason why the Fed is cutting rates. And right now, the reason why the Fed is cutting rates is because you're seeing a little bit of weakening, not enough to be fearful about a recession. So rate cuts lower instinctively the odds of a recession. Specifically, the long end of the bond curve falling yields-wise as 10-year Treasury yields go down. That lowers the odds of a recession because it means easier borrowing, more borrowing capacity, right? Things like that. So, yeah, maybe I'm just way too bullish. Maybe that's the case. But with all the knowledge I have on economics and, you know, markets, it's really hard to be bearish right now. Unless you are under the view that the economy is just going to slip into a recession. And at this point, unless there is some kind of big disaster with trade or some kind of big change and shock event, recession just looks very unlikely to me. Very unlikely. Let me know down below in the comment section, when is the last time the U.S. economy had a recession for no reason? Okay, just put it down below. Like, if it wasn't inflation, you know, COVID or global financial crisis, 08, dot-com bubble. Like, when was the last time we actually had a recession that just happened for no reason? No event, no big shebang, like nothing. Just we slipped into a recession. I can't think of it. Even like Volcker era, right? When we had multiple recessions. That was because of a rapid rise in inflation. And the economy that was more heavily weighted towards manufacturing, which is a high capital intensive business, which takes on a lot of loans a lot of the time. Today, even with like the inflation that we've seen in 2022, yes, we did have a rolling recession. Like, that's for sure. Certain industries went through recessions, came out of them, others went in. But again, to the point, the economy is so diversified. Even the inflation shock we had in 2022, which was the biggest a lot of us have ever lived through, we did not have a technical defined recession because the economy is so large that if some areas are weak, then others are stronger and it makes up for it, right? You really need a shock event. You need something to come out of left field and just, pow, take it down. Global financial crisis, right? COVID, if you know, the government would have not acted as fast as they did, that obviously would have been an issue. But for anyone that really understands how the economy works, as I'm sharing this with you in this video, you wouldn't be concerned about a recession unless there were to be some kind of trade embargo with China and trade falls out under the floor, that very well could be a recession catalyst, if not a depression catalyst. And I don't think Trump wants a depression. Some people might think so, but I don't. So let me know your thoughts on this down below in the comment section. Check out that link down below in the description of this video to come join the trading community as well. Have a great rest of your day, and I will see you in the next one.